Hey, before we jump in, just a quick reminder to subscribe so you can keep exploring the marketverse with us and level up your financial IQ. All right, let's get into it.
What if I told you that you could build your financial future just like you'd build a house? Seriously. You wouldn't just start throwing up walls without a plan, right? Of course not. You'd need a blueprint. Well, that's exactly what we're going to do today. We're drafting that blueprint together, laying the foundation, putting up the frame, and raising the roof to create a really simple but powerful plan for a secure life.
And this right here, this is the whole point. This quote from a Reddit user just nails it. Financial planning isn't really about complicated spreadsheets or, feeling deprived. It's about getting to this place, a place of peace of mind, where a broken AC is just an annoying inconvenience, not a total financial catastrophe. That freedom, that's what we're building.
So here's our game plan. First, we'll design the blueprint by figuring out your goals. Then we get to work building a safety net. That's our foundation. After that, we'll start putting up the framework by tackling any debt. And finally, we'll raise the roof by putting your money to work. Ready? Let's get building.
Okay, first things first, we need that blueprint. Before you save a dime or invest a penny, you gotta have a plan. This part is all about deciding what you actually want your money to do for you. It's about designing the life you really truly want to live. So let's kick things off with a pretty deep question from researchers at IESE Business School. And I mean it. Take a second and actually think about this. If money was completely off the table, what would you do? Your honest answer to that? That's the cornerstone of your entire financial plan. It tells you what really matters, and that becomes the why behind every single decision you make from here on out.
And if you need a little help with that, here's an amazing exercise. Just close your eyes and picture your 80th birthday party. What do you want people to be saying about you? About the life you lived? Was it adventurous? Was it generous? Was it secure? When you connect those big life values to your money today, everything suddenly becomes so much clearer. It's an incredibly powerful first step.
All right, you've got your blueprint in hand. Now it's time to pour the concrete. A house with a shaky foundation is going to crumble, and it's the exact same thing with your finances. This section is all about creating that rock-solid base, and we're going to do it with an emergency fund and a simple budget.
The absolute cornerstone of your financial foundation is an emergency fund. The recommendation here is to have at least 6 months of your essential living expenses saved up. And this is really important. This money needs to be liquid, easy to get to. Think a high-yield savings account, not the stock market. Why? Because when life throws you a curveball like a job loss or a car that dies, you need that cash fast, without any penalties. It's your financial shock absorber. Now for the other key part of our foundation, the budget. And hey, don't let that word scare you. A budget is just a plan. It's simply you telling your money where to go, instead of scratching your head at the end of the month wondering where it all went. It's the #1 tool for taking back control.
So, where do you even start with a budget? Well, this chart is a fantastic guideline from American Consumer Credit Counseling. You can think of it like a quick financial checkup. Are you somewhere around 35% for housing? Are you managing to put 20% towards savings and investments? Now look, don't stress if your numbers look different. This is not a strict rule. It's just a really powerful starting point to see where your money's going and if that lines up with the life you designed in your blueprint.
Okay, with that solid foundation in place, we can start building the framework of our house. And for us, that means tackling debt, especially that high-interest debt, because that stuff can really weaken your whole structure over time.
Now, when it comes to paying off debt, there are two really popular ways to go: the debt avalanche and the debt snowball. The avalanche is all about math. You attack the debt with the highest interest rate first, which saves you the most money in the long run. The snowball, on the other hand, is all about psychology. You pay off your smallest debt first to get that quick win and build some momentum. It feels good.
And check this out. This chart from Investopedia shows you exactly how that plays out. So in this example, with a high-interest credit card and a lower-interest car loan, both methods get you out of debt in the same amount of time, 11 months. But just look at the difference in interest paid. The avalanche method saves you over $500. So which one is right for you? Do you want the math on your side, or do you need those motivational wins? Honestly, the best plan is whichever one you'll actually stick to.
Foundation is secure. The framework is strong. Now we get to the really exciting part: raising the roof. This is where we stop just playing defense and start putting our money to work to build real, long-term wealth through investing.
So the IASE article lays out 4 timeless principles that are perfect for beginners. Number 1, start early. Seriously, even small amounts can grow into a fortune over time thanks to the magic of compound interest. 2, diversify.
You've heard it a million times. Don't put all your eggs in one basket. 3. Avoid timing the market. Look, even the pros are terrible at predicting the market swings, so just focus on consistent long-term investing. And number 4, keep learning. The more you know, the more confident you're going to feel.
And this piece of wisdom is so important. Investing isn't just a math problem, it's a psychological one. The market will go up and it will go down. Your biggest challenge isn't going to be picking the right stock. It's going to be managing your own emotions, not getting greedy when things are soaring and not panicking when things are dipping. A steady plan is your best defense against your own brain.
And there you have it. The house is built. But before we hand over the keys, let's just quickly pack your toolkit with a recap of the blueprints so you're totally ready to start building on your own.
So let's run it back. Here's your complete financial house blueprint. It all starts with designing your goals, your why. Then you lay a solid foundation with an emergency fund and a budget. Next, you build the framework by conquering your debt. And finally, you add the roof by investing for your future. You follow these steps and you'll build a structure where you can live securely and, well, sleep a little better at night.
So, you have the blueprint now. The entire plan is laid out right in front of you. The only question left is, what's the very first brick you're going to lay? Are you going to calculate your emergency fund number? Maybe sketch out a quick budget on a napkin? Or maybe just take 5 quiet minutes to really dream about that 80th birthday party? Whatever it is, the most important thing you can possibly do is start today.